British American Tobacco reported a 10% rise in adjusted diluted earnings per share to 96.1 pence for the 6 months ended June 2011 from 87 pence. In South Africa, market share strengthened and volumes were higher compared with the exchange rate benefits. This resulted in good profit growth.
British American Tobacco market cap 434 billion rand, the largest stock in our market, but not in the top 40 because of inward listing nature. Price earnings 16.5, dividend yield 4.4, and I had to make some assumptions because the dividend is in pounds and I made some exchange rate assumptions there. Not a bad set of numbers, and what we see from them is that revenue growth at 2%, but pushing up their profits by 18. The inverse is Southern, and that could be a little bit of margin expansion. It can also be the third of £1 billion in share buyback.
Well, I mean, yeah, look, I mean, British American Tobacco, fantastic management team. They're really on top of their game. They know what they're doing. The big thing what they're doing is, so the volumes, you're not seeing absolute volume growth, but what they're doing is they're pushing their global drive brands. They've got the Dunhill and they've got Lucky Strike.
Yeah, they're key brands.
They're key brands which are much higher margin. So they're getting their customers, instead of buying the kind of middle of the market, let's go and buy more expensive cigarettes, which really drives their profit margins. If you look at all their segments, all of them saw increased profit margins, which is really fantastic.
I mean, but apart from volumes didn't do that well, apart from their big brands. I mean, they call them the likes of the global drive brands. And that's where we saw volume growth of around 11%.
Yeah. So I mean that's the area of the business that you want to grow.
Yeah.
So it's really fantastic. Management's very good at taking costs out of the business, putting more through their existing factories. They do occasionally buy another cigarette brand and then push it through their existing factories. And fantastic from a cash flow perspective, just absolutely spitting off cash. They don't need it. They're using it to buy back shares and, as you said, a 4.5% dividend yield.
And what they're doing, I mean, in essence, we talk about management, we've mentioned it in the previous two. These folks, you've got to say, are in one of the toughest industries in the sense that, I mean, let's be blunt, your product kills your customer. Sure. They've got legislative issues, they've got illegal cigarettes, they've got advertising issues, and management team top notch. They've navigated through that in its entirety. This is something they've been on top of. I think there was the first report I was doing some digging back. They mentioned it back in the 70s.
Yeah. Well, I mean, also, I mean, this share, if you can kind of rewind and buy it 10 years ago, I mean, it's up 10 times. It's a fantastic share. And fantastic management. Difficult industry, but getting it right.
And shifting more towards the east, we can certainly see that focus in North America, Western Europe drifting. And what that does mean,
markets in a sense where the regulations haven't really
quite got them. In South Africa, we're getting there, but we're not quite California levels. China's probably nowhere with the regulation yet. And it also means moving some factories. So they close factories in the west, open new factories in the east again.
Look, I mean, they're not in China because China's closed.
Yes, China's Philip Morris.
Yeah. So, but I mean, yeah, certainly much more emerging market focus, which is fantastic.
I'm glad you mentioned Philip Morris, because Philip Morris's margins are sitting at around 45%, and the likes of British American Tobacco only around 35-36%. Do you think that this is an indication that there is room to increase margins, or do you think margins naturally, globally, are going to start coming down? And you've got to throw the word addiction into all of this because it really plays a big role in margins, right?
Yeah. Well, I mean, yeah, I mean, that's one of the things. I mean, management have said that they're going to. I think they've got a 2-year plan to get it to 39%. They've already taken it to 37%, so they believe that they can do more, which again drives profitability and it's fantastic for the cash flow.
The share buyback, 13 million shares, £335 million sterling. I said in the front that probably helped in part, the margin growth and the buyback helped push up the profits on flat revenue. Broadly, share buybacks, are you a fan of them? Would you rather have the money returned directly to shareholders?
Yeah, it actually depends on how expensive the share is. I mean, if management believes that they can get a better return buying back their shares than they kind of can get from investing in new businesses, then I'd say fine, buy back your shares. But I'll probably prefer a dividend. It's just I can then make that allocation.
My point exactly. Give me the cash, I'll make the choice.
With regards to the regulations, and perhaps you can help me out with this, Simon. Globally, is this going to be negative overall for the tobacco companies? Do you think that eventually we're just going to start seeing sales plummeting dramatically, or do you think that addiction is going to prevail, all price increases, and that we'll still see this these companies, British American Tobacco and all the other tobacco companies, still be very entrenched in society?
Well, I mean, I don't think the world's going to stop smoking. Certainly not tomorrow or in 20 years' time. I don't smoke, but a lot of people do. But certainly there is a big push because smoking does ultimately kill you. And I mean, if you look at what's happening in Australia, we're watching Australia quite closely. They've got legislation which they're trying to push through, which will make it plain branded cigarettes. So you won't be able to say, oh, that's a Marlboro and that's a Dunlop. It'll just say cigarettes. And it's going to have a ghastly picture of a lung, which, you know, as some diseased lung or somebody without teeth. It's all been caused by cigarette smoking. So that is quite a worry, because if that legislation goes through, I think other countries around the world will also look to it.
And that destroys their brand power. And as we said already, cigarettes retail selling and manufacturing is about brand.
Yeah, well, I mean, that's exactly it. I mean, that, you look at British American Tobacco, they're trying to push their premium brands because that's the one they make more on. Obviously, the tobacco companies are pushing hard back against that, saying they're taking them to court and saying, listen, you can't just steal our intellectual capital and our intellectual property like that.
Okay.
But, yeah.
Okay, so hot or not?
We've owned it for a long time. We do still own it, but I wouldn't be adding to it at this point.
So you wouldn't be accumulating at these levels?
I wouldn't be accumulating. It's had a very good run over the last 12 months, and not at this point.
Target price to sell? Any ideas in terms of where
Well, I think it's about 315 around that handle at the moment.
315.
We'll probably start looking to lighten up a little bit, probably 330 around there.
Simon?
Hot's a strong...
Disclosure, please.
I own British American Tobacco because I smoke cigarettes, although I smoke Philip Morris cigarettes, but I can't buy Philip Morris shares.
Yes.
It's a nice underpinning. I hear the point that it's certainly not cheap. Some stocks, when you say they're not cheap, it's because they never get cheap. British American Tobacco does sometimes get cheap. I like it. The 315 would bother me, but wouldn't completely scare me off. They're going to pay you 4.5% to hold it, even at these price points. But I think you might pick it up at a dividend yield of 5 or 5.5 in the next 12 months. Maybe. Of course, you might have missed a boat. Short answer, I think if you don't have a moral issue with holding sin stocks, it's a good base stock for a portfolio, along with your bulletins and your sasses. Sure.
Fantastic. Okay, we can now get into Jonathan's hot stock pick. So, what is it?
Well, yeah, I've said RMI, so that's come out of the whole first round RMB group. If you look at it very basically, it's 25% in Discovery, 25% MMI, and 50% Outsurance. Now, if I look across those three, Discovery is still growing nicely. I like the stock, paying about a 2% dividend yield. MMI, you're going to get a lot of synergy benefits with Momentum and Metropolitan with the merger. And if you look at Outsurance, they've said they're happy with the current market share. They're not really looking to grow, and basically most of their earnings can be paid out as dividends. So I mean, I think you can quite easily see a 6.5% dividend yield from that stock, which is really fantastic. And
I mean, Metropolitan was one of the top dividend payers, if memory before the whole merge and make large. So pure insurance play. What's interesting, it gives you the long term, gives you the short term, and then kind of gives you Discovery, which is the serious innovation. Not that I'm dissing Outsurance for its innovation.
Yeah. Well, I mean, the other thing, I mean, if you look at Outsurance, I know management. I haven't met with them, but one of my colleagues has. They don't believe that they're going to be able to aggressively grow market share from this point. But if you look at other countries, I mean, in Australia, 90% of short-term insurance is the direct market, so not using the brokers. Whereas South Africa, the percentage is a lot less. In the UK, it's also higher. So I still think there is still quite a bit of room for them to grow.
Simon, hot or not, RMI?
I particularly like the Outsurance, the Discovery. Yes, the dividend yield I hadn't thought about before. If that give me a 6+ dividend yield, I'm going to call it hot.
So you would buy?
Sure.
Accumulate.
6 dividend.
Beautiful.
Sure.
Thank you so much. Appreciate your time. We have to wrap it there. Gentlemen, it's been a pleasure. CNBC Africa has launched the All Africa Business Leader Awards that celebrates exceptional leadership in business in Africa. Nominate your leader of choice today by going to abla2011.com. The closing date is on the 31st of July. Well, that's it for this edition of Hot Stoxx. A big thank you to Jonathan du Toit from Truffle Asset Management, and a big thank you to Simon Brown from Just One Lap, who is my co-host, and from me, Eleni Giakos. That's it for this edition.